welcome to Val School Accountancy. This video gives you a very quick revision about accountancy, partnership business, fundamentals of partnership business or basic concepts about the partnership business, minimum and maximum number of members in the partnership business. Minimum 2, maximum if it is banking business 10, other business 20, it is as per 1932 Act. As per 2013, what is the maximum number of members in case specifically if the question comes, you should write answer is 100. As per 2014, what is the maximum number of members? Answer is 50. In case in the question if they are asking you to write what is the minimum and maximum number of members in the partnership firm, generally means you should write it is 2 to 50. Minimum 2, maximum 50. And the Partnership Act is 1932. And you should know the difference between deed and agreement. Agreements can be in the form of oral or written, but deed must be in written format. It should be duly signed by all the partners and must be registered. And Section 4, 1932 gives the definition about the partnership business relation between person who have agreed to share profits of a business carried on by all or any of them acting for all. So that is mandatory. Section 4, 1932. So partnership business. Profit and loss sharing ratio wise, as per deed or agreement, what has been mentioned depends upon that profit or loss will be shared to all the partners. Mutual agency. All the partners will be treated equally irrespective of their capital contribution. And unlimited liability. It is very dangerous form of business organization. Partners are individually and collectively liable for firm's debt. Jointly and severally liable for firm's debt. So partners would not hesitate to sell their personal assets to settle firm's liabilities. So it is very dangerous form of business. And contractual relationship. Contractual relationship wise, each and every single partners are being agent as well as principal for all other provisions. If deed is accepted, interest on capital will be provided to the partners. If deed is silent about interest on partners' capital, no interest will be provided to the partners. Same like that. In case deed is accepted, interest on drawings will be charged and the drawn amount, how many percentage has been accepted, will be charged. And remuneration may be in the form of salary or commission. That will be in percentage, commission will be in the percentage on the profit, and salary will be in a fixed amount rupees per month. Will be multiplied by 12 for a year. And profit and loss sharing ratio. What has been mentioned in the partnership deed, as per that proportion, profit or loss will be appropriated to the partners. In case partnership deed is being silent about the profit and loss sharing ratio, will be treated all the partners equally. So equal ratio, that profit and losses will be shared to all the partners equally irrespective of their capital contribution. And the charge against profit and appropriate profit are most important. Some amount, some items are being charged against profit. Charge against profit like interest on partners loan and advances are being as the charge against profit will be treated in the profit and loss account only, not in profit and loss appropriation account. In profit and loss appropriation account, appropriatable profit only will be written. So like appropriation, what has been mentioned in the deed will be given the first focus while appropriating the profit to the partners. So interest on partners' capital, salary, commission and the other remuneration will be provided from the net profit. Then if any excess amounts are there in net profit, that will be provided to the partners as per their proportion. In case if it is being as net loss, then net loss will be entered in the credit side of profit and loss appropriation account. You well known, and interest on drawings, if anything is there, that will be entered, and loss will be appropriated as per their profit and loss sharing ratio, what has been mentioned in the partnership deed. So charge against profit and appropriatable profit, that is most important. What are the items are being as charge against profit and appropriation profit, you just focus in that. And special aspects. Partners capital account. Partners capital account can be two types. What it is? Fixed capital and fluctuating capital account. Differences are most important. How it is differing? So first difference is how many accounts will be prepared in fixed capital account. 2 accounts will be prepared. One is partners capital account and another one is partners current account. So all the current activities adjustments will be treated in the partners current account, but remain partners capital account will be same, and no changes will be happen in the partners capital account in fixed method. In case permanently if they are withdrawing their capital money, that will be affected the partners capital account in fixed capital money. Otherwise, in case if they are bringing additional capital into the business, that also will make changes in the partners capital account, especially in fixed capital account method, and remaining and all will be treated in current account in fixed capital method. And next one is fluctuating capital account. In fluctuating capital account, You will learn all the items will be treated in only one single account. It will fluctuate each and every year, but partners fixed capital account will not fluctuate. Partners fixed capital account will show always credit balance, but it sometimes may show negative balances. Which one? Fluctuating capital account. That and all most important you keep in your mind. And now profit and loss. As per the partnership deed, this profit or loss to the partners will be distributed. If deed is being silent, it will be given equally to all the partners. And past adjustment, very most important, this also being as the special aspect. Past adjustment, mistake happened already, so now we are going to rectify it. And when and all firm can be reconstituted during changes in the profit and loss sharing ratios, admission of a new partner, retirement of a partner, death of a partner. And next one is the dissolution of partnership business. You should know the differences between dissolution of partnership and partnership business. That is most important. So these all being as the special aspects of the partnership business. Profit and loss appropriation account, that is most important account. It is considered as the extension of profit and loss account. In the 1 mark they may ask you, what is the extension of profit and loss account? That is profit and loss appropriation account. Profit and loss appropriation account is considered as the extension of profit and loss account. It is extension of profit and loss account. Most important it is. And if any net profit or net loss in the profit and loss account, that will be transferred to profit and loss appropriation account for the purpose of appropriating firm's profit or loss. In case if any items has been mentioned in the deed like interest on capital, commission, salary, interest on drawings, so that will be treated in the profit and loss appropriation account. In the credit side of profit and loss appropriation account, net profit will be placed and interest on drawings will be placed. In the debit side of profit and loss appropriation account, interest on capital, salary, commission and other remuneration if anything for the partners would be provided. And after provided these all those things with the help of net profit, if any excess net profits are there, that excess net profit will be distributed to the partners as per their proportionate what has been mentioned in the partnership deed. So as per that profit or loss will be distributed. If it is profit, will be distributed in the debit side of profit and loss appropriation account. If it is loss, will be distributed in the credit side of profit and loss appropriation account. Most important. And journal entries are most. Whatever the item has been taken place in the debit side of profit and loss appropriation account, for that the journal entry will be profit and loss appropriation account data to that particular item. So whatever the item has been credited in the profit and loss appropriation account, for that journal entry is items will be debited, interest on drawings will be debited to profit and loss appropriation account, but transfer entries are there like net profit and net loss and profit distribution to the partners. Some transfer entries are there. Here two accounts will be involved. In case profit has been distributed to the partners, profit and loss appropriation account data to partners capital account will be credited in the partners. In case if it is loss will be debited in the partners capital account. So the journal entry will be partners capital account data to profit and loss appropriation account. Then interest on capital, how to calculate, how many months and the percentage and all, how much has been given from when they are bringing that capital money into the business, from that day to end of the financial year, multiplied by that percentages and multiplied by number of months and divided by total months in a year. So that and all most important, how to calculate. You practice lot many questions based on interest on capital. Most important one, it will be an inevitable item in the 6 mark, 4 mark and 3 mark, even a single mark. And next one is opening and closing capital method. Sometimes in the questions they may ask us to prepare the opening capital. Sometimes in the questions they may ask us to calculate the opening capital. They would be given that closing capital. With the closing capital we are going to add the drawings, deduct the profit, and we are deducting additional capital also what has been contributed during the year. Then we can get easily our opening capital. So this is the method how to prepare it. So practice lot. Interest on drawings. Interest on drawings will be charged on their drawn money. Beginning of every month, mid of every month, end of every month. Likewise, 3 segments are there. Beginning of every month means the formula is 12 plus 1 divided by 2 is equal to 6.5. Mid of every month, 12 by 2 is equal to 6. And the end of every month, 11 by 2 is equal to 5.5. And beginning of each quarter, 7.5. End of each quarter, 4.5. So these are all calculating methods and formulas. You just use it. In case date is not mentioned in the drawing method, so what will be done? 6 by 12. Guarantee profit is most important. We can expect for a 3 mark questions. One partner can give guarantee for the new partner during admission. Otherwise, collectively all the partners can give guarantee to the upcoming partner. It can be treated in the form of deficiency ratio. In case deficiency ratio is given, as per the deficiency ratios, if any loss arised because of giving that guarantee profit to a new partner, that loss will be beared by all the partner by this deficiency ratio. If not, we will compare the old and new profit and loss sharing ratio, then sacrificing ratios will be taken into an account. So as per the sacrificing ratio, that partner will enjoy, new partner will enjoy, that is most important. Past adjustment. Past adjustment is also very important, and past adjustment is most important. Definitely we can expect one 3-mark based question based on this past adjustment based question. That may be errors of commission, omission, these kind of methods we can expect. So wrongly appropriated and correctly appropriated, and what will be the answer, that and I'll check it out. Instead of crediting how much has been credited, then we can check how much the difference is amount. For that we should pass the necessary adjusted journal entry. In the question also they are expecting to pass the necessary adjusted journal entry only, but don't write only adjusted journal entry. You write in the working notes, you prepare the past adjustment table also, that is mandatory.